The Toronto Regional Real Estate Board released its April 2024 Market Watch report, and one of these numbers really jumped out at me. No, it's not the fact that average sale prices are up 0.3% from last year, and it's not even the fact that average sale prices are up maybe 3% month over month. It's this active listings number jumping 74.4% from last year. In this video, we're going to do a deep dive into active listings and just see what is really driving the surge in inventory. Hey everybody, and welcome back to the channel. It's me, Rob Marsiglio, sales representative with Keller Williams Referred Urban Realty out here in Durham region, serving the great people of this area and doing my best to bring you weekly content on this channel. If you enjoy deep dives into all things greater Toronto area real estate stats and trends, this could be the channel for you. So please like this video and subscribe to the channel so you don't miss anything going forward. I'll throw my beautifully shaved head over top of this year-over-year summary just to show you once again what we're going to be diving into. We touched on these sales and the new listings in last week's video, and we will touch on this slightly. I'm going to show you the daily activity a little bit later on in the video, but I really want to dive into what is happening with active listings. We're up 74.4% from last year at this time. And here's what 2024 looks like so far compared to what we expect in a normal kind of average year. You can see our inventory humps happen in May, June, then another peak in September. And it's really a bit more of a gradual climb. Usually the biggest jump we see in inventory is from February to March. This year we saw that slow climb from January through to March, then a big jump March to April where, we went from well below trend to above what we'd expect in a quote unquote normal year. That line graph does a great job at showing you how we are under trend from January to March. We jumped above trend in April, but it doesn't really give you historical context as to how the March to April jump compares to every April going back to 2008. And that is why I put this chart together for you. Black bars are the actual change, and it's on this left axis over here, whereas the red line is the percent change. That's over on the right axis over here. You can see that in terms of an actual jump in active listings from March to April, this has been the biggest actual jump we've seen since at least 2008. The jump was just over 5,600 active listings. As a percentage, that is around 46% jump. So the only bigger percentage jump that we saw was back in 2017, when again, just over 5,000 unit jump from March to April, and the percentage jump was up closer to 65%. A lot of the talk on this channel lately has been about how condo inventory has really exploded. But that's not the only market segment that really drove this big jump in active listings. If you're looking for other property types in the GTA right now that aren't condos, don't be disappointed in the fact that, it's only condos coming to market. It's not what I'm looking for in these detached products. Because as you're going to see, it's the detached market that really drove a lot of this jump. These next three charts are going to highlight the 5 market segments that saw the biggest jumps in terms of actual jumps in inventory. And again, yes, it was driven by the condo apartment down in Toronto, where we saw a jump from just over 4,000 listings to just shy of 5,000. Maybe I'm overstating that a bit. It's just over 4,900, not just shy of 5,000. Onto the detached Toronto segment, we went from 832 listings to 1,600 active listings. That's as of the end of April. Detached in New York's 1,140 listings to 1,838. In Peel, we went from 932 to 1,627. And in Durham region, that detached segment, we went from 502 active listings to 975. Here are those jumps, the actual jumps in inventory. So again, condo apartments in Toronto, 879 unit jump, 768 unit jump in Toronto. In York, the detached market, we saw 698 unit jump, 695 in the Peel detached market, and in Durham, 473 unit jump. Now, I do like to just provide you with these stats and the numbers, the trends, what is going on, some analysis in the GTA market, but I do love a good shock and awe headline. So when I say that inventory has doubled and you're seeing these numbers, you're thinking, Rob, you're a liar. What are you talking about? Well, let me just show you. Okay, yes, I am a bit of a liar for this thumbnail because we only did go up 92.3% in the detached Toronto market and 94.2% in the detached Durham market, but we're just about 60 active listings shy of actually truly doubling our inventory in the Toronto detached market. And it was just shy of 30 listings that would have doubled the detached market in Durham. You can see here, the condo market in Toronto has the most inventory, condo apartments specifically. So it was only a 21.72% jump for that massive actual jump, whereas the detached market in York jumped by about 60%. We saw about a 75% jump, the detached market in Peel. Now, obviously, this jump in active listings has to do with a lot of listings coming to market and not a lot of listings being removed from the market. The biggest driver, at least you'd hope to see, of listing removals from the market would be sales. What I've been doing is tracking these numbers on a daily basis just to show you how things have been trending. This chart goes all the way back to the beginning of February. And here it is, a real beauty if I do say so myself. The solid lines are new listings and reported sales, black being new listings, red being reported sales, and the kind of more faint dotted lines are the 7-day moving average. So really, if you come to the Sunday, which would be the low point, the dotted line is kind of how many sales per day that week averaged. You can see new listings have been trending upwards really since February to where we are right now in May. This is as of May 5th. We did see the drop off because of the Easter long weekend. Not as many new listings that week, but sales have stayed relatively flat. Maybe a bit of a bump in mid-April in that week, but really have actually started to fall off in terms of pace through the end of May here. So this disparity, this big gap that we're seeing is what's really driving this pile up of active listings in the GTA. So I feel like we've painted a good picture as to where the buildup in active listings has been. We looked at the top 5 contributors to that active listings buildup from March to April. But your home search or your home selling experience is going to vary drastically. And a lot of that's going to depend on the price point that you're selling at. So I'm going to jump into a few charts to wrap the video up, just showing how different price points across the GTA are acting from a months of inventory perspective and sales as a percentage of new listings, which kind of give us that market temperature. Is it a seller's market? Is it a buyer's market? Is it balanced? Where do we sit right now? Now, when it comes to GTA Freehold properties, I'm going to focus on properties that are listed for $2 million or less in this video. If you are looking or trying to sell in that sub $750,000 market, it's still pretty tight. Months of inventory, it's been right around 1. I took one reading on March 26th, this most recent reading on May 6th. You can see that active listings have climbed, but the 30-day rate of sales has climbed almost in lockstep with it. So that market hasn't changed too much. It's when you get above 750,000 that you're starting to see months of inventory build up. Still relatively tight markets. If you're under $1.25 million, you're still under 2 months of inventory in those markets. But you can see that sales activity has fallen off in both of those markets in terms of the 30-day rate of sales, while inventory continues to pile up. And that is just exacerbated. The gap has really widened. You're talking almost a month more of inventory in this segment, from $1.5 million to $1.75 million. And again, you're over that into balance territory, quote unquote, according to months of inventory, when you get over $1.75 million to $2 million. Quick refresher for people who have no idea what I'm talking about. When you're talking months of inventory, usually if it's under 3 months of inventory, that'd be leaning towards a seller's market by the classical definition. Between 3 and 6 or 3 and 5 months of inventory is a balanced market. If you get over 5, it gets into that buyer's market territory by the definition. Now, absorption is the other piece of the puzzle here. And we judge absorption by sales reported as a percentage of the new listings reported in that same time frame. So I've done this on a monthly basis. You can see that sales as a percentage of new listings kind of, ticked up a little bit in that 750K or less market from February to March, but came back down in April, but still firmly in seller's market territory. Again, the definition by absorption, if it's over 60%, this SNLR, it's a seller's market. Between 40 and 60% is balanced, and less than 40% is a buyer's market, technically. But when you get into the above 750,000, you can see that really SNLR has dropped off right across the board, going from firm seller's market territory to more balanced, just under $1 million. And then getting more and more balance, 48%, 44.35%, then into buyer's market territory, technically, when you get over $1.5 million on the freehold market in the GTA. Condos are another story altogether. We saw big jumps in months of inventory, even under $500,000, bigger buildups in inventory. A lot of this could do with the fact that these new capital gains rules were introduced. People are trying to sell and close prior to June 24th or 25th. I'll try to put a little caption here to give you the exact date. So right up until that $700,000 mark, you're seeing sales come down and inventory start to build. This one segment's a bit of an anomaly. You see sales pick up in the $700,000 to $800,000 range, back down again when you get to $800,000 to $900,000, then up a little bit, the $900,000 to, over $1.25 million markets. One theory I have for this uptick in sales is that people who can't afford a detached or a freehold property are going down into the condo townhome market. You see a lot of those properties sell for over $900,000 in the city of Toronto. We'll wrap it up with the absorption. You can see absorption is way down. You're really in buyer's market territory, technically, right across the board. It's a kind of leaning toward a buyer's balanced market, sub $500,000 for the condo side. Not as much volume or sales volume in these segments to kind of define a clear trend, but you can see that we've been down in that kind of low balance to buyer's market territory really since February of this year. So yes, inventory is up, and no, it's not just Toronto condo apartments that are driving that growth in inventory. We're seeing it really across the board. We're seeing it across price brackets. Bottom line, it's not just one market that is contributing to this jump in inventory. Early signs this week are that we're still seeing some pretty big new listing activity. Sales are still pretty suppressed. Follow me over on X for an update on what is happening with showing activity. I know people have been enjoying that content. Just getting an idea of how active are buyers at different price points right now. Updating everything on a daily to weekly basis over on that platform. But again, I hope this video brought you some value. If it did, and you did enjoy this deep dive into the numbers, please consider liking the video and subscribing to the channel so that I can keep providing that value to you going forward. Thank you so much for sticking with me right through to the end of another video. Until we speak again next time, please stay safe and cheers.